welcome to the Closing Beat, everybody. Happy Tuesday. Hope you're having a good day here. This is just a quick show we do called The Closing Beat. It's sort of a stock market update. Go over the good, the bad, and the ugly for the day. We try to just give you some interesting stats, share with you where the markets are, what people were looking at for the day. We're financial advisors here at Jazz Wealth, and we're not the type that go out and play golf every day. We're here every single day. In fact, we're working on expanding the area here a little bit. And so we're always watching. And a lot of the time, what I'm just trying to do is just update customers that want sort of that daily pulse of the market, not necessarily because they're trading it or anything, but just want to get a quick update. Well, that's what we're here for. And for the rest of you that want to participate, that's awesome as well. We're playing a game. It's called Guess the Dow. Go to that website on the bottom right-hand corner of your page, and you can guess the Dow. If you're the closest without going over, we'll send you a $100 gift card. Or if you're a customer, we can credit your account. Even if you've put in the max in your Roth IRA or something like that, we can credit your account still. So it's a chance to sneak in a few extra dollars there if you want to participate, and hope you'll join us there. We also have a class. We do classes every week. I mention this every day because it's so important. We're a teaching financial advisor where we don't just invest for you and then, like I said, go play golf. We actually teach week after week after week. What can I help you with to help really get your dough straight? It's not always about investments. Sometimes it's about your personal finance as well. This week is going to be one of the more geeky classes that we have done. We're going to cover if you only have like once a week to invest, and you know that's better. I've done that with you before and kind of helped you understand how smaller weekly deposits beat the monthly deposits. We'll show that, of course. But if you only have one chance, where should you buy? Monday morning, Thursday afternoon, Wednesday morning, what should it be? So we're going to go back and show 20 years worth of data. Unbelievable the amount of effort that has gone into this, but well worth it, right? And so we'll be sharing that with you there on Thursday. It'll be in the dojo, so all of our customers get access to the dojo. That's like our own little private Netflix, sort of, but with only our stuff in there. We don't have to pay for content like HBO and Netflix. We'll cover that later. We create our own content. Anyways, we got a lot to cover today, so let's get into the stock market. You got a small gain on the day ahead of the Fed announcement. That'll be tomorrow. So all the excitement will lead up to tomorrow at 2 o'clock Eastern time. I don't expect you see a whole lot. You see some back and forth tomorrow. A lot of what sort of happened today you expect to bleed into tomorrow. And so with that in mind, you got the Dow up 33 points. It was pretty much negative most of the day. It wiggled around a little bit. S&P gained 7. The NASDAQ gained 32. You notice the S&P back above the 3,000 area. Volumes were light, right? So meaning the number of active participants, the shares trading hands throughout the day, very light. You got about 75% average volume on the S&P and just over 50% on the Dow, almost breaking through the 60% area there. As far as the Fed announcement goes tomorrow, 93% chance is what's currently baked in from investors that are trading that. They're expecting, 93% are expecting a 25 basis point cut. So just a simple cut there. 7% are expecting a cut bigger than that. And nobody, 0% is expecting that they will just somehow float through the Fed announcement and not make any sort of adjustment. They're actually 0% of the people believe that nothing will happen. Now, interestingly, overnight we had sort of the Fed funds rates really get out of control. It's the first time in over 10 years where the Fed had to step in. The New York Fed actually is now committed up to $75 billion in buying those short-term rates because the Fed funds rates overnight, they like it to be in that 2 to 2.25 range. It spiked as high as 5, and there were even prints at 9%. If you don't know what that means, just know it's bad. That is really bad that they lost control so easily over their target Fed funds rate, which is the rate that the banks borrow from each other overnight. And I've done a video on that in the past. So the Fed actually had to step in and will continue to step in. I believe they bought up about $38 billion today to bring rates back down, and they got up to $75 billion approved to do that. So that'll get talked about tomorrow as well because, well, that's a concern. They're supposed to have control over this, or they say they do, and they completely lost control today for a brief moment in time. Overnight there. All right, some stats for you before we dive into things going on here. The average gain when the Fed cuts rates in the S&P 500 is 0.38%. But here's the thing. You know, old Jerome Powell, we mention this every rate decision day. He doesn't have the best of stats if you follow along. If you were to compare him to the other Fed presidents going back to 1993, 94, Mr. Jerome Powell, on the day he makes his announcement, the markets have only been positive 2 times. There have been 12 Fed announcements. Tomorrow will be the 13th since he took over as the president. So not real good. Remember when he first started, he had 7 Fed days in a row that the markets went lower. And so it took 7 tries before he broke that streak there. Also, the average decline 1 month later, and it's a decline, for the S&P is 1.24%. Add that to the fact that you got September as a seasonally weak sort of time period there. You have a recipe for the markets wanting to sort of take a little bit of a break there. And so we'll see. Of course, we're going to cover it there. We'll go over everything with you. We also had some data come out. I don't know if you guys care about this. I'm just going to share it with you. Should I share it with you? So housing market index, basically home builder sentiment. How positive are they about overall building and things going on there? I'll show you a quick chart. This is really the only way I have to show it to you here. Here is the actual housing market index. You can see basically, if you're looking in the short term, looks real good here. Going back to 1990, here's the performance of the housing market index. The gray areas in the background are the prior recessions. So we're showing the last 3 recessions in there. And this is just a touch behind, but we're starting to move back into the highs that we set back here towards the end of the year, which would have been the October reporting period. Well, if I briefly, I'm going to have to do it like this, I think. Go with this double panel action here. If I do that, and I go back 1 year, when the housing market index hit that prior high back in October there, this is just sort of a sloppy way to show it to you. Here's the actual performance of the market. This is when we started No, we got to go back to October. There it is. So when it hit these prior highs over here, this is when we fell from that October, November, December area, that 20+%. So where are we at now? We're heading back up into that area. So again, if I just back this out here, we'll take out the, well, that's kind of cool. I can actually just do it like this. I didn't know that. Okay, cool. So here's the last time we hit that high, and you can see the orange is the stock market performance in the background. We are now headed back into those same October highs. So a lot of people look at that and think, okay, well, you add the Fed stat performance, you add the September historical performance, add to it where some of these economic indicators are, you have a recipe for maybe a little bit of a decline there. I don't know. I'm just pointing out things as I see them. You also have a stock market sitting at resistance, which is these prior highs, just begging for a reason to break above it, and certainly hope it does. But at the moment, you have people sort of sitting on the sidelines till the Fed gets back. Well, tomorrow we'll find out what the Fed decides to do. The big news for the day was oil. Yesterday, I believe someone asked the question, what happens after oil has such a big move? We talked about there being mean reversion, meaning the fact that oil takes a break and it likes to pull back, especially when these big moves, like we saw yesterday, occur near lows, not near highs. So a big difference there. If you missed that, maybe go back and check out the ending of yesterday's closing beat, just to kind of see that. It's pretty cool when you know the stats, right? I mean, instead of being the guy that comes out and says, well, I think this is going to happen and I'm bullish on this or bearish on that, and you just have to sort of accept that my opinion is good or bad. I don't like that. It's kind of cool when you can look at the stats and instead go by statistical performance versus sort of someone's guesstimate of what's going to happen. So the stats playing out today, 6.5% to the downside, maybe a bit more than most people would have expected. And because of that, you had a lot of those names that were up yesterday, just reverse course today. So if you're looking at ETFs that are sector-based, you can go into the Explorers here. This is the XOP, retreating from yesterday's nice pop, really. I mean, the XOP really could use a little bounce off lows there. Oil services coming back, still above the 50-day moving average, and we'll cover that a little bit more in a minute. Oil, if you want to look at the USO, is a direct way to play oil in that space. Commodities, if you play them as a chunk, they also pulled back there as well following that. I don't know what the percentage of oil is inside the DBC. The DBC is a commodity-based sort of index ETF, sector ETF, we should say. And then the XLE one that we follow a lot there, they had a great move yesterday, just pulling back a little bit here today, all on the price of oil. We also covered airlines yesterday. Those got a little bit of a break. American Airlines recovering some of what it lost yesterday, added 3%. You got UAL, which is United Airlines, just a touch higher on the day. And so some of those names, like we've talked about, being weak yesterday because of the price of oil coming back, was able to be, well, decently strong today. Now, what's going on with that? Why did oil pull back? Well, Saudi Arabia, tough as nails, unbelievable, very, very cool, came out and said, you know what, we've got about 70% of what we lost already back on track, right? The production that they lost from those missile strikes and everything, we've got about 70% of that back, and we'll have the rest of it back by the end of the month, which gives them like 13 days, 14 days, right, of their time. So very impressive, right, the fact that they were able to do that. So because of that, people going, oh, all right, well, maybe oil's not going to spike as much, and maybe I should just cool my sort of bullish position there. And a lot of people just choosing to take that quick profit in such a short little one-day gap like we saw there. So That's basically oil there. You got rates headed a little bit lower here, so we'll look at the long bond getting a bounce off these lows here. Remember, it was a really, really sharp spike in rates over the last week. I believe it was the fastest that we've spiked in 1 week in over 9 years. So very, very interesting bond market still, and the fun will continue because tomorrow, you, of course, have the Fed announcement there. So you got a little bit higher in the rates in the long term. You got the short-term rates, or you want to look at the 10-year here, just a little bit higher, back into the 50-day moving average. TLT is a long bond ETF that a lot of people like to play, and that one giving a little bit of a bounce here today as well. Your defensive areas got a little bit of a bid as well, just a tiny bit back into play here. Here's the ICF, which is basically a way to look at REITs if you like. You can use any ETF there. Utilities, little spike sitting near highs, of course, very strong still. And then consumer staples getting a little bounce as well. So some of those defensive areas looking good. Retail continued to pull back. I found it interesting that yesterday you had retail stocks pulling back largely because people said, uh-oh, how does higher oil prices affect retail, shipping and things like that? So retail started to pull back. Well, even with the retreat in oil prices today, a lot of retail names still continued to pull back. I sort of think it's just because they spiked so far so fast. A lot of these names really got ahead of themselves in the short term, and so you got a little bit of a spike there. Nordstrom pulling back here, one of the bigger drops of the day, about 10% on the day. Just a great rally over the last few days, and that's that old saying, if you like to zoom in and check these things out, it's the old saying that the bulls take the stairs and the bears take the elevators, meaning on the way up typically tends to be a nice sort of consistent move, and on the way down it's like elevator from the 13th floor down to the 3rd floor, just like that. So Nordstrom, one of the ones that continue to pull back. You almost could pick on pretty much any of them today. Macy's a little bit lower. Ralph Lauren, I'll bet. I didn't put that one. Yeah, Ralph Lauren a little lower on the day. 4%. Still looking good there. And that's basically it there. I'll point out Ulta. Ulta was a little bit higher on the day. This is one that's been beaten down after their last earnings announcement. Ulta was higher by almost 4% on the day. That's all from comments from Mr. Jim Cramer on CNBC. He came out and did a whole thing about Ulta and said he thinks that Ulta is within 10% of a bottom. So if you like Mr. Jim Cramer and you believe it's within 10% of a bottom, keep in mind it's a $230 stock. So that's $23 worth of wiggle room that they're sort of he's pricing in. But nonetheless, I tend to agree with him. A little extended in the short term. You're going to attract those bottom pickers in there. So a little help from Mr. Cramer gets things moving there. General Motors a little bit higher today, 3%. Apparently Washington and Mr. Trump are staying out of the negotiations that are GM auto workers currently on strike. So the negotiations between the company and the UAW helping, right? Just this mano a mano, right? The White House is supposedly staying out of it. We'll see what happens there. Chipotle is of worthy note today, 3.25% higher. Do you like Chipotle? The food, not the stock. I mean, the stock's doing well. If you like Chipotle, they've been testing out this carne asada. Remember, the CEO of Chipotle came from Taco Bell. So if the word carne asada, the way they're promoting it sounds familiar, Taco Bell, right? So this is his first real change, right? He made a little change last year, but little change, first big change for the new CEO. Carne asada rolling out across the U.S. I, for one, can't wait because my area was not one of the sort of regional test areas there. And because of that, stock higher. Carne asada is a little higher priced, by the way, so expecting that to drive a little bit more profit. We'll see. We'll see how that goes. I would imagine you follow social media to see how people respond because people are pretty active on the Twitter box there with their thoughts about new queso, new carne asada, things like that. So we'll see what happens. That's enough of Chipotle because I'm getting hungry. All right, Home Depot a little, oh, you can't see it. Home Depot a little bit lower on the day. Guggenheim downgraded the stock to neutral from buy. They said this is because of their ramp up, one of the only companies out there ramping up their CapEx, right? They're spending money on themselves to grow. And so stock downgraded a little bit, said that's going to eat into their profits just a little bit, as it probably should, but that's good for them that they're growing, or at least spending the money to grow versus buying back $1 billion worth of shares. Anyways, Match Group, MTCH is the ticker symbol there. Citi upgraded the stock, $95 price target. They said they like the international opportunity. Interestingly, the average price target is at those prior highs, about $95, $94.60 something to be exact, or close to exact. That puts you right back at these prior highs. They're basically just betting on it moving back towards those highs within the next 12 months. I have concerns about that, right? Because what about Facebook, right? All Facebook has to do is just like say, boom, we're now an international, we're offering the dating service and everything internationally. Done, right? Wouldn't that hurt Match? I don't know. Maybe that would hurt Match Group. I don't know. Your thoughts there, but that analyst says $95. Zynga. Zynga was rated the best idea for Stephens today, his analyst company there. Stock was higher by about 3%. They said Zynga is very much well positioned for a consolidation in the mobile gaming space. They think they're going to start to dominate there and sort of contract the whole space in general. They put an $8 price target on it. The analyst, though, was rather young in terms of total number of calls. Did I put that down for you? Yeah, he's got 21 total calls, so that's not really a lot. Most analysts are in the hundreds, so I'll give you an idea there. His success rate is 62% with those 21 calls, has a 1% average current, but keep in mind, it's 21 calls. A lot of those calls are still in play, so he's not really getting ranked on a lot of those yet. So I looked at the best analyst. The best analyst, highly successful actually analyst, he has an $8 price target as well. So at least, it shows that people are betting on new highs here for Zynga over the next 12 months. Interesting charts here for you to look at if you like the technical stuff. AIG hinting at a breakout, not perfect, but a little breakout there. MSCI also hinting at a breakout, rapidly moving back up towards those highs. And I put in Dollar Tree as well. Was that? Yeah, so Dollar Tree's a little extended here in the short term. You may find that it just sort of hovers around and lets the moving averages catch up a little bit, but those equal highs there, that'll grab some attention from a technical standpoint if, you like to look at that sort of thing. And just thought I'd share things that catch my eye throughout the day. You've got 72% of the S&P 500 still above the 50-day moving average. We went from 56% last Friday, the Friday before last, 56%, 69% yesterday, 72% today. So we've got this creeping up here. How can that be? We just talked about all the oil stocks breaking above the 50-day moving average yesterday. Wouldn't the price drop today have hurt some of those? Well, actually not. So I went through and looked at a lot of those that broke above the 50-day yesterday. Names like HP, Helmerich Payne, still above the 50-day technically, so that one counts. Marathon Oil, although it did pull back today, still above the 50-day moving average. Halliburton as well. By the way, the 50-day moving average is the blue line on any chart that I share with you. It's always going to be the blue line. So if you're just trying to figure out what the world is this guy talking about, now you know. So Halliburton still above there. And so you have these names, EOG is still above the 50-day as well. A lot of these names that helped boost our number to 69% yesterday, maintaining their sort of position here today, despite pulling back and having a rather rough day in general. You got 14 new 52-week highs. All of them closed in the green today, so they all hit the 52-week highs and actually managed to stay up there. So, of course, that's good news because that doesn't happen all the time. I tend to point it out when it does, but doesn't always happen there. Out of the 14 names, 4 of those were REITs. There you go. 4 of those were REITs. You had a couple 2 were REITs, 2 were utilities in the mix there. So that's those. Were there anything interesting to point out? Maybe Lockheed Martin, again at those highs. The defense areas did okay today from yesterday's sort of action. Pulte Homes hitting new 52-week highs, home builder, of course. And KLAC, KLA 10 Core, as a semiconductor stock. Remember, the semiconductors are one of the better performing sectors through this week. So last Friday we said, okay, over the next 5 days, what are some of the stats we can look at? SMH is historically one of the better performers over this 5-day period. This is day 2, by the way. Median gain of 1.65% since 1999, positive 63% of the time. So having KLA 10 Core moving higher, certainly helpful. How are the rest of them doing? Taiwan Semiconductors had a good day as well, helping boost the sector. Texas Instruments, little bit higher. They're all looking strong here in the short term, as long as we don't have any sort of trade issues going on there. Everything looks to be on track there. For the S&P 500, in the last 10 years, the S&P 500 has averaged a gain of 1.08% over this 5-day stretch, this Monday through Friday. Today is day 2. We've got just a small gain so far. No, still a little bit negative after yesterday. So that's that one. We've been following Republic Services Group. It did finish the day higher by almost 1%. So we drew the little line there to show where it has to grow 1.76% from in order for 1.81% in order for those stats to be accurate. Today is day 3 on that stat. I don't know if it gets there. These are fun to watch. Do you guys like watching? Let me know. You like watching these sort of stats? I could add more, but I just think it's fun just to kind of keep track of things, because over time you do enough of these and you start to realize that, oh, this is a stock that generally performs as it should, or hey, this is a stock that tends to not follow those stats. And if you do enough of them over time, you start to really get a feel for when you can trust these things and when maybe they're a little bit odd and not going to work. All right, FedEx. They're raising rates, by the way. FedEx raising rates in 2020, 5%, about 4.7%. I think it's in the scroller below. There it goes, coming across as we talk. They also missed on earnings. They reported earnings after hours. The stock is still down. We were expecting $3.15 a share. They got $3.05 a share. Missed on revenue by like 0.01 billion. What is that, 100 million? 10 million? I don't know. They lowered their guidance. Still concerned about trade there. So FedEx a little bit lower. That's going to hurt going into tomorrow. And what? Oh, Cracker Barrel. We don't look at this one a lot. A little small name here. Cracker Barrel higher by about 2%. Beat on earnings, beat on revenues, and store sales were really strong as well. That place is packed, right? People go on Sundays. I don't know how they do on the rest of the days, but very, very strong for them. HBO got the streaming rights to The Big Bang Theory for an ungodly amount of money, more than Seinfeld, I think, or pretty much right in line. I think Netflix paid $500 million for Seinfeld. HBO essentially pays $500 million and then $100 million for something else. It was sort of an interesting thing there. Cha-ching, right? Holy cow. All right, tomorrow, Fed rate decision. That'll come out at 2 o'clock. You've also got crude oil inventories that'll come out. That'll be an important one. Not that it's going to make a difference because it's so close in time, but that'll be a good indication here for in the U.S. is our overall stockpile. What else do we have? I guess I'll take some of your questions if you have them. Any other news we want to cover? Shopify, I think, was still lower on the day. They sold another 2 million shares. Stock was down by about 2.7%. Overnight, they sold 1.9 million shares, somewhere in there. I think it's like the 5th time they've done that. Smart. Raise money when you can, right? These corporations have it figured out. Us as little personal finance people, we're all like, pay debt off and, just get your dough straight and all that stuff. Corporations have it figured out. They can get money as cheap as they want right now, whether it's bond offerings or whether it's selling shares because their stock's done well. Yeah, do it. So they're doing well. What else? Any earnings tomorrow? General Mills comes out tomorrow, 77 cents a share expected. Yeah, that's pretty much it. Let's dive into some questions here if you have any, and then we'll call it a day. Yeah, we did a stat a while back. So Ricardo making a comment that the break to the highs gets us closer to the 30% mark, which is really odd. That doesn't happen. We did a stat back in July, I think at the end of June, where we showed the performance of the stock market year to date. We have never closed above that mark. I think it was like 21.2%. We never closed above that in history when the first part of the year gained as much as it did, as fast as it did. So we'll review that, of course, again, if we do break and end up closing that. But yeah, it's interesting, right? Oh, SeaWorld lost their CEO, just sort of quickly decided to move on. Can you check Snapchat from a technical perspective? Yeah, breaking out of a little tiny downtrend there. Still the uptrend very much intact. Overall, it's just plugging ahead. There's nothing super exciting. Obviously, you like today, the way it performed. If you own it, I wouldn't be really nervous. I'd be excited after what we've seen, this shallow little pullback there. Yeah, I don't know. Sure what the question is. What are your thoughts on Kraft with the high dividend? Yeah, I mean, there's a lot of, I got the question a lot on Altria and Kraft today because of that little drop. Did it close lower on the day? You just had, look, Warren Buffett still owns the company. He's the biggest shareholder, but the second largest shareholder peeled off 20-something million shares. And look, they have a huge position. They had like 250 million shares. They just took a little bit off. They're like, hey, it's a little bit risky in here. I don't know that it means anything in the short term. The stock is largely stabilized since then. They're rebuilding. Give them some time. In the meantime, what's the dividend on that thing? 5.6%? I don't know if that's enough to get me to say, let's start a new position. But if you own it, it's kind of like, all right, well, as long as they have the cash to pay it, and they still have plenty of cash to pay it. So that's good. What should you expect if the Fed doesn't cut rates by 20 points? Yeah, I don't think it's good. I think after what happened today where the Fed sort of lost control a little bit there, which boggles my mind that it's not like a headline topic, But after what happened today, if we find that the Fed doesn't do much of anything, they better have some strong language. They better say they're going to start asset purchases again, some sort of extra QE 14 or whatever they want to call it. They better say something in order to hold that market up, because I think it won't be good if they don't cut the rates. Now, do I think they should cut rates? I don't think so. No. What does that suggest about the overall health of the market, that the leaders are getting sold off and the value is starting to get bought up there? That's actually a recipe for pushing the markets above the highs there. It's a little bit of rotation. Notice that it's not an all out of one sector and into some other sector. So it's just a nice little profit taking, and that profit's being put into a lower cost area. For now, I'm okay with that. Yeah. Could you open an account of Jazz at 17? Yeah, no, unfortunately, got to be 18. Yep. And it's not like that everywhere, so don't let us stop you. I thank you for thinking of us, but don't let us stop you. You can open accounts if you have income and everything. You can go to like Fidelity or Schwab. I believe they both offer, if you're under the age of 18, but you actually have income, I think you can still open a Roth there. So I appreciate that, but maybe check in with us when you're 18, because we don't have the capability to do that. Love to have you, though. Twitter has some good earnings growth. I think they can keep up their growth, just a flash in the pan. Yeah, I just don't see Twitter long-term keeping up with their current growth. I like that they've come off lows. They've tried to turn the corner. I don't see it. I don't see it. I've done a little looking into this. I've spent some time reading about it. What they've done is great. You, of course, like to see increase in sales. The marketing's going well as far as getting that ad revenue like Facebook or Google does. I don't know. All in all, things are good now. Can they weather any little downturn? Isn't that one of the first places people are going to run away from? Yeah, I don't know. That bugs me. It's so much money is all that ad revenue like that, because that dries up. As soon as people say, you know what, business is tough, I'm not going to advertise as much, gets hurt a little bit. How likely that someone invests $500 in the stock market in 30 years from made $100,000 off the 500, or made $100,000 off the 100,000? If they only put $500 in, I don't think it's very likely over a 30-year time period. I've done that before. One of the classes I did for customers was to say, what happens if you put $1 extra? Let's just say it's $1. Okay, $2, $5, $10. At what point does it really make a significant difference? And believe it or not, the $1 adds up to over $5,000. I think we did 20 years in that case. And I mean, it's $1. So I couldn't say off the $500. That'd be maybe a fun thing to look at, but need a little more meat to that bone there. Yeah, Jack, I'm with you. Why do we need to cut rates here? All the econ numbers looking good. There just must be something that they're focused on and we're not. You see the slowdown. You got to see the slowdown. But are we in any bad position? Are we in a need to play defense at the moment? I just don't see it. I don't see it. Yep. Oh, gosh. Sorry if I missed some of your questions there. I don't know which one. Shop is bearish these days because of, Shop keeps issuing shares. They're trying to keep up with Amazon. They got to raise the money. Yeah. But good for them. Like I said, they're doing it at the right time. They have the ability to do it at a higher price. So awesome. Let's mark some time. Well, Leighton, haven't we marked time? So Leighton say, why don't we just go sideways for a while and just sort of let the markets catch up and everybody just take a break? We kind of have done that, right? Biggest question I get is from people that say, hey man, my 401k is not doing anything. And they go, can you help me? I'm noticing very little or no growth. Or, hey, I just opened an account with you last year. I'm not seeing a whole lot. Well, if you look at the stock market, we sort of have been marking time near highs, not in a perfect sort of sideways way, but back in 2015 all the way through 2016, it was the same thing. For most of the year, nothing happened. And it was kind of like, well, this is not exciting. Why? It's hard to make the argument, invest in the stock market, because not much was happening. But, that's kind of what we're doing. I agree with you, though. There's nothing wrong with just pausing for a while instead of expecting to see some kind of a crash or getting all bearish. We'll see. Come on. Where's the patriotism there? Greatest economy of all time, right? How does the final rate cut decision get decided? It's a vote. Does Jay Powell have the authority to override? I don't believe he has the power to override. It's a vote in general. There are Fed members who have voting abilities, and then there are just Fed members, like junior Fed members, that can voice their opinions. They can certainly weigh in on things. They don't have a voting right. Every now and then we'll cover like when a voting member speaks versus when a non-voting member speaks, because there's some interesting stats on that one. Yeah. Ricardo did the math real quick. Thanks, man. Well, that's pretty ambitious. I would say to average that is probably not going to happen. You need to put a few more dollars in there. You'd have to actually do 19% each year, not an average. Ooh, that's too much. That's probably too much. You'd have to be pretty accurate there. Anyways, yeah, that's all I got for you. I hope you enjoy the rest of your day. Appreciate you all for joining us here on The Closing Beat. If you learned something or I helped you in some way, hit the subscribe button. That's all I ask. I mean, obviously, we want you to keep us in mind here at Jazz, but if in the meantime you're like, I got this, man, I'll keep watching The Closing Beat, hit the subscribe button or that thumbs up button. It does something in the back that's more geeky than I even pretend to understand, but I know we appreciate it. Thank you. Enjoy the rest of your day, and we'll see you tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.